Coinbase stock just joined the S&P 500 and Wall Street is taking notice. The stock is up over 60% since its lows of this year, riding the crypto wave and beating other traditional financial names like Goldman Sachs. But is this surge based on sustainable fundamentals, or is it just another hype-fueled crypto rally? In this video, I'll reveal my fair share price for Coinbase and whether I think it's currently undervalued or overpriced. I'll also give you my buy, sell or hold recommendation, including a final star rating to wrap it all up. I'll break it down into 4 key sections, starting with what Coinbase actually does as a company. So yeah, let's jump in. And let's start off by looking at a brief snapshot of Coinbase over the past year. We can see that revenues and EBITDA is up and that the company has a healthy EBITDA margin of 48%. Now later on we will see why that's not the case all the time, as the EBITDA margin is also quite volatile. We can see that the stock has gone up 23% over the past year, and it's actually headquartered in New York City. The company does not have any physical headquarters, but legally at least it's headquartered in New York. So Coinbase is the leading US-based cryptocurrency exchange, providing an easy-to-use platform for buying, selling and storing digital assets like Bitcoin and Ethereum. They generate most of their revenue from transaction fees, but they've also expanded into staking, subscriptions, institutional custody and even blockchain infrastructure. Now part of the S&P 500, Coinbase has added legitimacy, but also faces heightened scrutiny. The question then is Coinbase built for long-term success, or is the company overly reliant on crypto booms? So the bull case for Coinbase is quite clear. It's the crypto infrastructure leader. It has a first mover advantage in a rapidly growing space. We also have the S&P 500 inclusion. This means more demand from index funds and increased investor trust. We also have diversifying revenue. It's expanding beyond trading into services like custody, staking and blockchain tools as well. But there are a few key points in terms of the bear case as well. We have extremely volatile revenue. It's still heavily tied up to unpredictable trading volumes. And we also have crypto sentiment swings. A cold crypto winter could crush user engagement and also profits for Coinbase. So now we know the core business of Coinbase and some of the bull and bear case scenarios as well. Let's look at the financial analysis and look at some historical financial data and see how has the company performed over the past 5 years. And we will look at the data using a few key charts, starting off with the core financial performance of Coinbase. Now, usually when I try and value great companies, at least, I can see that the revenues and EBITDA is growing consistently each year, and that's not really the case for Coinbase. We can see that it's all over the place. The revenue goes up and it goes down, and so does the EBITDA as well. This of course has a lot to do with cryptocurrencies in general. It has to do with how they perform and how much people trade cryptocurrencies. In that sense, the company is heavily dependent on the performance of not only itself, but also of Bitcoin and other large cryptocurrencies as well. Another interesting chart to look at has to do with the debt sustainability of the company. And looking at this chart, we can see at least a more positive picture than the revenue and the EBITDA growth. We can see that yes, debt has gone up, right, but in the past 4 years it's been quite flat. That's a good sign. We can also see that the company has a lot of excess cash, right? The excess cash is much larger than the debt within the company, making the debt to EBITDA ratio not really being an issue, right? We know that the company can pay down all the debt on the balance sheet using the excess cash that it has. Another really interesting chart has to do with the enterprise value performance of Coinbase. Now the enterprise value, you can see it as a more refined market cap of the company. And here we can see it's quite a volatile company, right? It goes up, it goes down, right? We can also see the enterprise value to EBITDA ratio. Think of it like a price to earnings ratio. And here we can see it's going up and down quite a lot, right, over the past few years. As we later on will look at the free cash flows of the company to get a fair share price, here is the free cash flow performance of Coinbase over the past few years. We can see that revenue has gone up and down and it's been all over the place. And the same thing has been with free cash flow, right? Even though the company made a lot of free cash flow in 2021, we see what happened in 2022. That's a big negative year. Now in 2024, finally the company is free cash flow positive again. Now, the final chart I would like to show you has to do with the share performance. The worrying part of this has to do with the number of shares within the company. We can see that in blue in millions. And this shows us basically how much this company dilutes its shareholders each year. And this is quite staggering. Coinbase dilutes their shareholders by 8.1% per year. That's not great, showing us that the company is not relying on its profits to pay its employees, right, with stock-based compensation. Now with that said, let's give the company 2 price targets as well, which we will later on use in the valuation part. Starting off with the enterprise price target, here are a few key assumptions I have for Coinbase for the coming 10 years. I'm valuing the company all the way up to 2034. Now, the first assumption is that I see revenues to grow on average by 12% per year. Historically, in the past 5 years, we saw 51% per year, but that was on a really low base, right? So I think 12% is much more realistic and also conservative when doing the valuation. I'm also assuming an EBITDA margin of 32%. 48% is the best year for Coinbase. That's really optimistic. I think a more realistic rate would be 32%. And finally, I'm also assuming an enterprise value to EBITDA multiple of 20 times. That's in line of where the company was valued in the past year. I think that's a realistic multiple for a company growing its revenues by 12% per year. Now, with all of those assumptions in mind, we get an enterprise value price target in 2034 of $249. Let's also give the company the second free cash flow based price target in 2034. I'm assuming free cash flows to grow at 14% per year. That's slightly higher than revenue, and that's, I think, quite a generous assumption, especially looking back in the past 5 years when the company has remained flat in terms of free cash flow. I'm also assuming a long-term free cash flow yield of 6%. That's higher than the 4.3% that we had in the past year. And I'm also assuming that the share dilution will continue, right? The company clearly has excess cash and it still continues to dilute shareholders. And I don't expect that to really change in the future as well. Now, with all of those assumptions in mind, we get a free cash flow price target of $341 in 2034. Now, as we have 2 price targets, let's weigh them equally. And then we get a weighted price target of $294, which we'll later on use in the valuation part to estimate the annual compounded return that we will get as investors. Okay, so now we looked at the financial data that we have, and we have given the company a weighted price target as well. Let's jump to the stock valuation and see where the fair share price of Coinbase lies today. So to get the fair share price for Coinbase today, I'm basically discounting all the future cash flows to a present value of today. And by doing that, we get a fair share price of $193. And this also implies that the current share price is trading at a 26% premium versus this fair share price. We also get an estimated annual compounded return that we get as investors at 7% per year. Now, there are a few interesting takeaways here. First, yes, the company is trading at a premium, but it's not grossly overvalued as many other high-flying crypto stocks are right now. The other interesting takeaway is that we have 7% that we get each year, and that isn't great, right? The S&P 500 usually gives us 8 to 10% per year, so 7%, that's barely achieving market rate returns. Now, on top of that, you're taking huge risk investing in a company with volatile revenues and basically that is tied with the success of cryptocurrencies in general. But that could also be a positive, right? If you are bullish around cryptocurrencies, then yeah, I think these estimates are way too conservative. It all depends on where you personally think the demand for cryptocurrency will be in the future. And here is a complete overview of the growth rates I applied towards Coinbase's revenue and free cash flow in the coming 10 years. Now, this may look like the revenues and the free cash flow will grow consistently each year. Now, having looked at the data together, right, we know that that will not be the case, right? Also interesting to note is I've applied a slightly higher growth rate, right, for free cash flow all the way up to 2031, assuming that the company will become much more profitable in the same time. And here we can see a complete overview of the investment thesis, right? We can see that today we have to invest in a company that's a negative cash flow for us as investors. Then we get positive free cash flows from the company each year, right, as we're holding on to the stock. And then finally in 2034, we have to sell the stock at our weighted price target plus any free cash flows we will get in that year. Now, with all of that said, my final recommendation for Coinbase stock, now this is not financial advice, is a hold at this present moment, at least for myself. But if you're bullish on crypto, I can well see that this company is a buy, right? And my final star rating is 3 out of 5 stars. And looking at my detailed rating of Coinbase stock, we can see that, yeah, it's a mixed bag. We can see that the company has strong revenue growth and strong EBITDA growth. However, we don't see any strong free cash flow growth. In terms of valuation, that's really not that attractive. 9% per year is not beating the market. I would say, however, that the company has a strong brand and reputation, but to me it's more uncertain whether it has a strong competitive positioning. Yes, it has a great platform, but it's not the only platform where you can trade cryptocurrencies. And finally, if you are really interested in investing in Coinbase today, here you can see in the table where the annual compounded return goes up or goes down depending on where the stock price is, right? We can see if the stock price goes up, then our annual compounded return goes down. But if the stock price goes down, then it becomes much more attractive. We get a higher expected annual return. Now, for myself, I would like to see 15, 20% or higher, right, when buying a stock. And that would mean that Coinbase stock would have to go down by 40%. Is that realistic? Who knows? Perhaps. But at roughly $150 per share, the company of course becomes much more attractive to invest in for the long term. Thank you so much for watching this video. If you found it informative, please feel free to like and subscribe. And if you go down to the link in the description below, you get the free one-pager which includes 5 years of financial data, my full DCF assumptions, and the forecast summary as well. So yeah, thank you, and I'll see you in the next one.